So first of all, my name is Nadya Petrova. I'm part of the investment team in the European Investment Fund. I'm part of the team that focuses on technology venture capital funds across Europe. And today, me and my colleague Anna, who is part of our social impact team, will have the pleasure to present to you the investment process of EIF, how we look into proposal, how our analysis is going. But maybe first, if you are not that familiar yet with the European Investment Fund, we are a multilateral institution. Our shareholders are the European Investment Bank, the European Commission, as well as several financial institutions. Our main goal is to support small and mid-sized enterprises in Europe, as well as mid-caps and infrastructure projects. And as such, we try to be the catalyst and the supporter of innovation, digitalization, and hopefully for a more sustainable, clean, and technology-advanced Europe as such. How do we actually serve that purpose? So we have several, let's say, what we call them mandators, or where the resources of our activities come. It's from the European Commission, from different member states, from the European Investment Bank itself, our mother company, as well as some private institutional investors that actually are willing to entrust their resources for us. As such, we have two lines of how we achieve that goal to support small and mid-sized companies across Europe. First is through what we call equity investments, which essentially is investment in funds across Europe, or so-called fund-of-fund investment activity. And then we also have debt activity, which is through guarantees that are given to banks and guarantee their portfolios, as well as some microfinance institutions that we also support. For our specific equity activity, which is also the main topic of discussion today, you can see our impact for the last 30 years. We have deployed, I think, probably also at this point, close to 50 billion into equity commitments across Europe, have committed to more than 1,600 funds, and have existing relationships with more than 700 managers in Europe. And as you can see on your screens, we are proud that some of the investors that we supported along the way brought quite impactful companies for Europe along the way, which you already know very, very well from your daily lives as such. Here I pass to Anna.
Yes, so this slide is showing how we are organized in our equity investment team. So we have a different sectorial focus, and we come up with this organization as we believe that this reflects pretty well the market, and this doesn't necessarily match our mandates. We have different mandates that can be transversal towards like different sectors. So we have our life science team. Maybe some of you have talked to Cindy and Miruna early on. Then we have the technology team, and there we have also different sub-teams that work at different stages, from a very early stage to a bit later at Series A, Series B, then to go up to scale-up investments. Then we have the green tech and the social impact division. So the green tech is the team that is responsible to invest in green tech funds in order to achieve the objectives of the European Green Deals. In that bucket, we have a number of different type of funds, from very vertical to more generalist. It's a team that has really grown a lot in the last 5 years, together with the social impact team that is actually focused more on the focus of the European Union on the social economy, so on sectors like education, healthcare with an impact angle, diversity, inclusion. We have infrastructure team. It's a bit of a different team. I don't think we have many managers from that area. Are funds that invest in infrastructure projects. Then the sustainable growth is one of our biggest team, actually, because it's like our private equity team, so focusing on later stage. And lastly, the private credit. So quite different, but still very complementary to our sectorial equity activity, something that emerged after the financial crisis of 2008. This slide displays how we are present with our products in all the stages of the market. So we invest in tech transfer funds to go, as I said earlier, to VC, seed and early stage funds. And then, as I said, we go till to the growth funds. You may have heard also of the European Tech Champions initiative, a big mandate for Europe, for EIF, really focus on the scale up, since these represent a very big market gap in Europe, till lower mid markets, as I said, private credit fund and infrastructure fund. So we try to be present in all the stages, and we also have different appetite for risk. Obviously, when we enter really early, we have a higher risk appetite. Later on, the risk decreases, but we tend to cover all the market.
So now that you heard a bit about what EIF does, and especially around our equity investments, now it's time to understand a bit how our assessment process works.
So, yeah, this is quite relevant for you. You always ask us, or probably you also discuss this process in the one-to-ones. So obviously we start with sourcing, as you guys do with your companies. Maybe differently from some of your funds, our sourcing approach is mainly inbound, of course. We are very visible in the market. We are one of the biggest LP in Europe, so we get a lot of visibility and inbound proposals. But still, we are very present also in conferences, in markets that are less developed. And when I say this, I don't refer only to specific geographies, but also to some sectors that we would like to invest more, and where we want to tell the market that we would like to do more. Once we source, there is a first assessment that is what we call the screening phase. It can be done in different ways. It can be a desk review, or we have some calls, can be one, more. It really depends on how clear is your proposal for us, and if we want to get more insights, more clarity. Also, we discuss with the rest of our team. So this phase is still very important, because we decide at the end of it whether we move to the due diligence or not. Then we move to the due diligence after discussing with our internal investment committee, with our team. And then we will go more into the details, because we have all the other slides on it. And the due diligence, after the due diligence, then we decide whether to push that deal for approval. So we send it to the rest of the EIF services, like risk, compliance, our legal colleagues. And after that, we ask for an approval from the EIF governing bodies. When we get an approval, we enter the legal negotiation. That is still a very intense part of it. Our legal colleagues after this session will give you a bit more of information, and especially for first-time team, emerging team, the teams that have the first investment by EIF, it can be quite long and intense legal process. But now let's move to the real core of this session, that is the due diligence. So, as you see, this is, I don't know if I can call it our triangle of assessment, but when we receive a proposal, for us it has several elements that we actually first need to look how they come together, and if they're going to give us, let's say, commercial confidence that this is something that we are willing to support. And let's say our focal point starts with the investment strategy. So
this for us, it's the DNA, it's the core of the proposal you're coming with us. So what sectors are you going to invest in, what stages you're going to cover, and what geographies you're going to address. This is also the element of your proposal that we're never going to ask you to change. There are maybe other things around your investment strategy, or let's say the elements that fit into your investment strategy, that if we have, let's say, any doubts or concerns, we'll try to work together with you if we see sufficient merit to shape in a way that we would be comfortable to come on board. But the investment strategy is the focal point and the one topic that we're not going to touch. Rather, we will see how each of those elements that you also see on the screen are fitting together. So in the separate teams that we'll also will go into more detail in the following slides, the three main elements that we look how they fit into the investment strategy that you chose for your fund. First, let's start with the team and the track record. So we'll look into the composition of your team and the experience, expertise, of the team members that come together to execute this strategy. I think that what is relevant maybe to mention here is that we are looking for a comprehensive team. It's not every person can do all the jobs. It's a team as a whole that can possess the sufficient track record, experience, and knowledge to work on the strategy they figure out. So we'll look into the track record, into your previous experience, also into the reputation. We do extensive referencing also of the teams to see how they stand on the market. We'll also look how complementary the team is, the thing that I just mentioned. What are the team dynamics and how well the team is working together. You can definitely sense this during our meetings. And also we'll also go about incentives and also alignment of interest, which transpire with the team commitment and the carried interest. I think something to definitely highlight here, and you heard this already in the morning in our enhanced diversity due diligence, is that we'll also look into the DEI approach of your firm and what do you do actually to promote diversity within your own firm. Then a next point, and of course I'm listing those not particularly in the order of importance. We'll also look into the market that you're addressing. We'll look into, okay, what is the opportunity in that market? Can you actually source and win deals in that market? What is your competition? And what is your ability to win deals, and how do you stand to the managers that are already there? Because it is fair probably to claim that we have seen, if not all, then most of it in Europe anyway. And then from the fund parameters, this is just governance matters and terms and conditions that we're going to discuss and look into together. Now, me and Anna will go into a bit of more detail for each of those elements that you see on the screen. And first, for the investment strategy, what we're again going to look into first would be, as I mentioned, how it is shaped in terms of stage, sectors, and geography. But then in addition to that, we are also going to see or analyze how you plan to deploy it and how you plan to manage this portfolio that you're going to build. How many reserves are you going to leave for the investments? How many investments you're going to do? Like how diversified your portfolio is going to be. This is something that we also delve into as such. Then, as I mentioned, we'll see how you source deals. How you also plan to win deals, how is your approach actually to that, and then we'll also look into how you plan or can add value to your portfolio companies. There are some very standard strategies around that, there are some very specific, but it is something that we're going to assess to gauge a bit how your strategy is going to be executed and also your ability when we look into the team a bit later. Something that we introduced a couple of years ago more actively is the ESG one, where we look actually of your ESG approach, both on the firm level, but also on the portfolio level, how you actually tackle all of those things. We have a dedicated questionnaire that we always share with our managers, and then we see how their approach towards that is. We sometimes have conversations if there is any willingness actually to better your approach towards ESG. So what we try to gauge essentially on that is what you want to do consistent with what you have done before? Is it aligned with your experiences as a team for what you have done before? If you're able to indeed source good investments to execute what you want to do, and how can you create value for your portfolio companies? For the market opportunity itself, to begin with. So we want to see how good your understanding is of the market you're going to address. Obviously, very, very important one for you. We, of course, would know, or let's say would have already an idea of what you want to do and who the players in that market are. I think what is valuable for us is to see your understanding also. When we talk about market opportunity, what do you base that on? Is there a mega trend that you are now trying to pursue? Is it indeed something new that is very unique to the market, or something that indeed has potential? And we'll see how you also stand compared to other players in that market. And we would definitely expect you to know your competition, because we would already know your competition. You having an understanding of your competition is also quite telling to us, also by communicating what you want to do and how you're going to differentiate yourself actually from your competition. So as such, we first want to understand if the market you're going to address, is it indeed as promising as you say? Is it also addressing particular gaps that we also see and would be willing to support and help address? Or is it something that it's probably that we have seen quite a lot to date? And again, we'll try to measure where you stand compared to your peers in that sense. Because what you also want, let's say, we need to understand that, as Anna mentioned earlier, our inbound deal flow, in this case, is quite rich. And when a proposal comes to us, it is compared to not only what we have already in the portfolio, but the pipeline that comes to us as a whole. So there is a bar that is set with us, and we need to choose or try to choose the managers that are going to go after, or let's say above this bar. So your differentiation here also starts to be quite important then, and for you to signal to us what makes you so different, that we'll need to go through this, as you see, quite elaborate process in assessment, potentially commitment to do so.
And just to complement on that, you may understand that we are in a very special place in EIF, because the access to data that we have is incredible. And as such, we can really look at what are the main characteristics of funds that perform well. We can do a lot of benchmarking, and as such, we are in a very unique situation. But going ahead, team. So team is, I mean, everything is important, but team is so important. This is a people business. So everything starts from who is gonna take care of this fund. We really want to have super high clarity on who is the team that is gonna manage this fund. Very clear comments on the setup. We are looking to understand what are your responsibility within the partnership, but also at the second layer, what is your dedication. And also we analyze very in details your skills and expertise. As Nadya was saying before, it's not that everyone needs to have all the skills and expertise. What we are looking at is complementarity. So we expect some investment expertise, and we will go more into the details with the track record. But we also expect operational experience, ability to manage an institutional fund. And we also, obviously for us as a European institution, it's very important the reputation aspect. So we assess that there are no reputation risk. And in general, we often use this comparison. We say that the partnership in a fund is like a marriage. So you really need to be aligned with your partners, and it's something not to underestimate. And it's important that we get comfort that you have high alignment on the vision, on the strategy, on everything that relates on the management of the fund. So when we go in due diligence, we, as we mentioned, we really visit you at your office, and we spend a lot of time with you because we really want to assess all these soft aspects, but that are so key when you invest in people. And we also spend lots of time on one-to-one discussion, so we talk to each partner and also to the second layer of the team in a one-to-one setup, because we really want to get comfort on the fact that people are aligned and they feel part of the project and there is no red flags. Another thing that we analyze is the hiring plan. Often, you come to us, it's the time you are raising a much bigger fund or your first, big fund, and so you are still few people, but you may need more people to really manage this workload. So we ask you what is your plan in that sense, how you are gonna structure the team, because we pay attention at the workload. And that depends also a bit on how you manage your fund activities, but that is something that we spend also some time on it. Going more also in data, we really go into the details of your salaries, your bonus, your career allocation, your skin in the game. We ask for all these data points because we want to make sure that these incentives are first fair. There are no strange things. Unfortunately, it happens, since we are in a diversity event, that sometimes we realize that the women have a lower salaries also at partnership. I mean, it's not something we encounter all the time, but that's something that we pay attention, make sure that there is fair compensation. And so that is one part, and the second part is also that we want to make sure that there is proper incentivization of the team that comes, we like to think that the partners are not, and the teams are not incentivized by management fees, but the carry. But we analyze everything together and separately to make sure that there is a proper alignment of interest. And then just to cover all these slides, the decision process. Sometimes, especially for teams that don't know EIF, how do you make decision? And you get maybe some confused answers, like we didn't think about it, or it's just me and my partner. So what we want to understand is how you make decisions in your fund. And we expect that all this information and data are aligned with the story that you are gonna tell us, that you are telling us about the strategy and what you really want to do with the fund.
Maybe just a quick. I'll try to do this actually in a minute, and it's related to something that I mentioned earlier about our enhanced diversity due diligence in terms of the fund. And this is what we actually want to understand: if a manager has built processes and policies within its organization to ensure fair treatment of everybody independent of how they look, where they come from, and so on and so on. So what we actually look into, okay, did you already build this infrastructure to ensure that hiring is done in a fair manner, remuneration, promotion, and so on is done like that? Do you have dedicated trainings around, for example, unconscious bias and things like that? And then we'll also not only look at how the team is structured, or let's say the composition of the team itself currently, but what you aspire also to build in the future. We'll also try to gauge a bit the culture of the team and how is diversity promoted. I mean, do we see a lot of turnover? What is the reason for that turnover? Then, as such, all of these things we'll actually try to understand with our discussions with you and see not only what the current status is of your firm, but also what you aspire to do. And this also feeds in then into our analysis. So maybe to wrap up this section, when we look into the team, we want to see what team do we have in front of us versus the strategy you want to execute, to what extent it is completed in terms of not only numbers, but also in terms of skills and capabilities. Do we see good dynamics and cohesion inside? And also if the team is indeed sufficiently incentivized and also aligned with us as LPs through their team commitment.
So linked to the team is, of course, the track record. That is something that we often discuss also with the first-time team or emerging managers. Because sometimes, especially with the first-time team, there is maybe a wrong belief that as we invest in first-time team, we don't need some investment track record. That is not true. I mean, we can still invest in first-time team, but at the same time, we request some track record, investment track record. When we look at the investment track record, we look at two things, the relevance and the attribution. So the relevance is how your track record resonates with the strategy that you are trying to execute in terms of sectors, geographies, and stage. So to give an example, you are raising a green tech fund in Italy. But all your track record, you have some good track record, you have spent some good part of your life investing, but you have invested in growth stage in the US. So in this case, we would still look at this track record because we believe that there may be still some transferable skills, but that would be for us not relevant or partially relevant track record. So it's very important. It's one of the first things that we look at when we assess the track record. The second part is the attribution. So what was your role in that investment that you put in your track record? So we go investment by investment that you put in our nice Excel file to really see what was your role? Did you lead the investment? Did you source the investment? Were you sitting in the board? Did you help it? Did you help the company exit? So we don't look just, okay, yeah, this person has worked in that fund and that fund has invested in this company. We really look at what role you played in those investments. So also there we understand what is the attribution, if it's full, partial, none. Of course, also we are very analytical. We look at all these kind of things, but we also want to understand what is your previous experience and what you learn from your previous investment experience. So we spend during the due diligence really some time for you to elaborate on past experience and some specific cases. What we want to see is how you think, how you approach the investments, and also what are the transferable skills that you can bring to the activity of the fund. Also, what is very important, and you may have seen it in our Excel file, we look at the realized and the unrealized investments. We look also at the overall performance of your track record. ideally, we would like to see managers that have full cycle experience. So from sourcing to exit. Not always possible, depends on the market, it depends on the geography, it depends on the sector. But we still go very into the details of your track record. When it's in unrealized track record, we really try to understand if you still were able to drive some value or there are early signs of values in your unrealized portfolio.
Yes, I want to also quickly add something to that. Of course, track record is important also in the sense that this is one of the tools that we have to understand your experience and ability to execute the strategy that you perform, that you're presenting to us. As Anna very rightfully pointed, so there are certain strategies that are, or sectors as such, that are just now emerging. So requesting a full cycle track record would probably be unrealistic in that case. And this now feeds back to what we already shared with us, that we'll also look into the how comprehensive the team is, because you can have for example, if we say you invest in deep tech, semiconductors, quantum computing, and so on. Well, these are things that now fairly recently start to be on the top of the agenda and start to be more of an investment case. Well, not many investors probably have a full cycle investment experience to say, yeah, I exited a quantum company. Frankly, I cannot think on the top of my head for anybody, but if somebody knows in the audience, please tell me, that would be great. So as such, we'll actually look also into, of course, the track record and complementarity of the team. So if you have a deep tech investor, we'll definitely want an investor there. We also want specialists, or if they have comparable or transferable skills from their previous endeavors, let's say, this is also something that we are going to take into consideration as well.
Yeah, and I know that in the room there are many green tech and impact funds, same type of reasoning. We are starting seeing exit, but still very nascent market. So yeah, we have to take another approach to our analysis, but still get comfort that you are able to execute on the strategy that you are selling us. So that is not an excuse not to have track record. We are still looking for some data that backs the fact that you are able to deploy the strategy. Let me see if did I cover everything? No, just maybe last point is on the current and expected performance. I would say I will focus more on the current one. I think when we look at the track record of previous fund, predecessor funds, of your previous activities, as we were both saying earlier, we do a lot of benchmarking. The amount of data that we have is incredible. I'm still blown up, honestly, of how much we have. and as such, it's very important for us to assess the value that you have managed to create. Yeah, the expected performance. Yeah, difficult to evaluate, especially for very early stage funds, more relevant for later ones or private debt and other type of a strategy. But also we want to make sure that, all the story resonates well. Like if you were not able to deliver returns in the past, how can you expect to have over 20% IRR? And so we also challenge you a lot, and we want to make sure that all the information that you provide us is well thought, backed with as much data as you have, and also about your thesis, your way of viewing the market. We don't like when people just put, okay, 3.5x, okay, but where does that come from?
Yeah, exactly. I think it's important for you to think when you do your projections that we are looking for a sanity check. I mean, again, you can probably also put a 10x on your expectation. When we start looking into it, we'll do a sanity check and say, okay, is that look even reasonable? Have we even have we even seen that on the market already? And we'll do our own stress testing on your expectations in any case. So yeah, I mean, it's good to be optimistic, I would say. It's also the part of the business, but it needs to be based on, how can I say, it needs to be connected to reality also in its own way. And maybe also something to mention for the track record is that, again, for the attribution, we also do a bit of referencing also when we look into the team itself, not only to check the reputation, but also to check the information that you're providing us to say, okay, I did this and this investment and I actually exited and so on and so on. I think that both me and Anna have examples where we saw these blockbusters around Europe that I have at least 10 people claiming them. So in that sense, this also gives us a bit of reality check on what you have done actually in the past, and we find the respective counterparties, or you provide them as references, and we double check how your role actually in these investments that you present to us.
So when we ask you for names, we call these people because I don't think many people realize, but also we do also reference calls that are not based on names that you provided, based on our own.
Based on our own connections
network.
And the fact that we are also connected to other stakeholders in the ecosystem give us also the opportunity for us to proactively do that.
Cool, we move ahead. Fund parameters, very important, especially we spent a good portion of time to discuss with the teams to make sure that we are aligned, that the team is comfortable with their terms and conditions, but also that we are as an investor. Just setting the scene, we are here as a market-oriented investor, and we want to promote market standards. So that's also our way to approach our discussions on terms and conditions. And yeah, there are some terms that are related to, the management fees, the carry, the establishment cost. So there are a number of things. Then in the process, we go more and more in details. I would say there are some very important data points that we have to confirm during the due diligence. And then when we move to the legal negotiation, we should have a good view on the terms that we have aligned, and then we finalize the legal negotiation. The terms and conditions are not just boring parameters, they are all things that help us to judge the alignment of interest of the team with the fund activities. Also, so we spend a lot of time also to make sure, like, why do you allocate the carry interest to this person or to this person? On the management fees, we don't have strict or one-way approach. What we do, we really look at the budget of the management company and really make sure that the management fees are adequate to sustain the management company, to give fair salaries to all the team, but also that people are not just making a huge amount of money through the management company. Because in venture capital, we want the teams to be incentivized by the carry, not by the management fees. So we spend a lot of time on that. We do a lot of analysis, and we discuss, and then we usually come up with an agreement with the fund manager. Then I was mentioning before shareholding and the decision-making process. So we want to understand who is making the final decision of the investments. It happens sometimes that there are some people owning the management company, and then there is a team there executing on the strategy or taking care of the daily activities of the fund. That is not how we see it. We want to see some overlap between who is taking the decision and who is doing the daily operation of the funds. So if the people go sourcing, executing the funds, talking to the entrepreneurs, then they should be the one be involved in the decision. And then the management company, shareholding, also here we don't have one-way approach. What we expect is that there is overlap between the people that take care of the fund and the management shareholders. Then we evaluate case by case, depending on the structure of the management company itself. Then, the legal structure, of course, we want to make sure that there is a compliant legal structure. So that is also something that is closely looked by our colleagues in compliance, also at the due diligence stage to make sure that there are no compliance flag. So all this conversation to make sure, again, that everything in your fund, all the fund parameters are there to support your decisions, your way of executing on the strategy.
So now to close it actually up and open then the floor for some questions. Why actually we end up sometimes not going forward with a proposal? First, we are an European, let's say we follow a European agenda. We want to support the European ecosystem. This is also our mandate. Hence, for VC managers that cannot comply to our focus, maybe here, in addition to the EU27 focus, some mandates also give us the flexibility to also include EFTA countries. But we keep a very strong European focus. If unfortunately you don't feel comfortable with committing to that, then unfortunately we cannot commit to you, because that would be a firm commitment. You would be expected actually to meet these requirements that go to the LPA. And if that is not something that you can either commit or we don't have sufficient comfort that you are going to achieve, then that would usually lead us to the decision not to go forward. Then legal setup, meaning setups in jurisdictions that are not, how can I say, not compliance friendly, but acceptable from a compliance perspective. So Cayman structures and things like that, it's something that it's not going to fly with us. We want very clean or let's say we rather prefer very clean and straightforward legal structures in jurisdictions that are not, let's say, controversial as such. And then the strategic fit, which means what we are currently trying to achieve and the goals that we have to deploy and that are entrusted to us with from our mandators. If your proposal doesn't fit particularly to that or cannot get into the high bar, and then it would be set, then it is also something that unfortunately will outright make us say, yeah, maybe for the next time something changes. So these are maybe some of the outright requirements that will lead to that decision. But if you, let's say, go through this first, let's say, round, what would, let's say, keep us a bit concerned to continue with you? One would be if, let's say, the team does not possess the, let's say, the experience that we expect them to, if they don't have sufficient investment experience or not sufficient sectorial experience for the strategy that they are willing to deploy, or have no idea how to manage funds. That would be something that would keep us rather concerned. Also, if we sense not very good dynamics to keep a very stable and cohesive team, if through our referencing or, let's say, information received from the market, we sense that the reputation of the team is not very good, that also transpires a bit into the culture. If we have very high turnover, we are really not dealing with a stable team that we want to do. And if Anna says that it's a marriage within the team, it's also a marriage with your LPs as well. Mm-hmm. So we actually want to see, let's say, a stable relationship, and hopefully one that we can have not only for 10+1+1, but sometimes for even longer than that. And yeah, the succession plan is also something to mention. Let's say, it's a sensitive topic, but we want to have, let's say, if we see that some partners might maybe in 1 or 2 fund generations decide to, let's say, take other endeavors or let's say more relaxed life, that there is already a plan that the firm is looking for to supplement these skills that they are potentially going to part with. And as such, if there is none and we see this risk actually coming, that is also something that can lean us into that direction. For the investment strategy, first, if we don't have very much conviction into how you source, but also your ability to win deals in the market that you are targeting. If you're not going to be able to reach what we refer to a minimum viable fund size to execute your strategy, because our support might be one, but then you still need to get a sufficient resources to execute your strategy. If we don't see you actually coming with a specific unique selling proposition, because again, as I told you, we have probably seen it all, your differentiation then as such is very, very important, especially in more saturated markets that you want to enter and that we are already quite exposed to. And then if we see a too broad strategy, that is also something that it's a bit challenging for us to support. But also if, let's say, your portfolio model, how you deploy the fund and how you manage it, how you plan reserves and so on, is something that we might not have particular comfort around, is also something that might raise concerns around for us. And if you have strategy drifts that are unexplained for us and also don't match what you want to do, this is also a factor that plays in our analysis. Then the governance and the terms and conditions, you have them already on the screen of our main topics of concerns. Again, maybe on this part, it's important to say that these are things that we very actively discuss with you. I think that one of the main takeaways from those two would be that if you as a manager don't agree to change anything, then this is where usually the process stops. We're always ready to discuss and find a compromise between you and us if we have commercial conviction around all the other elements. But if there is no willingness to discuss and change, then this sometimes is also the end of the road for us. So I think this is it. So now we give the floor, I guess, to you. I don't think that we have help for somebody to pass the microphones, but I can help if there are. Okay. Who else, maybe, if you want to already have on the second?
Thank you. Hi. Okay, so she's Thank you very much for the explanation. And I was wondering, which is the percentage of new funds that you are investing every year compared to those ones that they are already in the market and you are following on?
I think it depends from year to year, to be frank. We don't have a fixed ratio, if you will, for each year. It also depends what comes to our pipeline, because maybe some years we'll have more re-ups, so that would be a repeat relationship for us. Other years we'll have more. I think, I would say 40, 50, 60%. I don't know if we have other colleagues that can also have some other statistics, but that is my impression. It probably depends also on the strategy. By the way, because for new and more nascent sectors and strategies, maybe we will see more new managers than experienced ones. So that is also a factor.
Does it work? Yes. Does it work? Yeah. Yeah. So I think also in previous years, like we were having this chart with the first-time team and emerging manager, and usually, we proud ourselves investing and really shaping the market by investing in a first-time team and emerging managers. So we do a lot of new projects, especially in some market, in some sectors. It has been a very good portion of our activity. But of course, your point, and I think that is, it's important to know that we have still to support a market like the people that come with second and third generation in a macroeconomic situation or in a geopolitical situation where there are not too many private investors compared to, for example, the US and so on. So we have to continue to support the market, although ideally we would like to have less and less weight, but we still do re-ups and subsequent generations.
Yeah, I mean, again, something to know about us is that indeed we try to build managers that we found conviction to support, and that of course requires sometimes 2, 3, sometimes even more fund generation. So we are usually not one and done investor. We try indeed to build and support an ecosystem. Again, if there are maybe good reasons for not participating in any following fund generations, then we'll consider it. But our general approach is that we go with the intention that we would be there for a couple of fund generations.
Yeah. Hi, Mark from Almanac Ventures. In the case of new funds / new firms, throughout your process, your analysis process, at which point do you need to have, for example, the AFM already set up, or can you do that already all in a first close when you come in, if you're coming in on a first close, or is it like a condition that you have that set up before, because then you don't have all of the legal signed, etc.
Well, I mean, if we commit, then we sign all the legal documents. Yeah. So as such, you need to have your structure already ready.
At the moment of first close.
You have the... Does that work? Yeah. Thank you for the presentation. Very, very insightful. Really appreciate the time you've taken to explain to us. We're new fund managers, and we're rather small, so full-time fund managers are limited, so we attract experts in our fund. And these experts, some of them are being paid, some of them are being incentivized through the carry. What are you looking for ensuring sufficient commitment from these experts in our fund?
I can start. Tell me if I understand well your question. So you are basically saying that for now, you are not full-time in your team because you are still building the project, and then you have like some experts as well to help you with the activity and launching the activity. Correct. And they are incentivized through some
so the founders are full-time, and we attract experts to fill in the gaps in our expertise. They're essential for what we offer, also to you. So what are you looking for to ensure that you see the sufficient commitments from those experts?
So I'll start and then you can complement. So I would say that we still expect that you have the core team well equipped with a complementary set of skills and expertise since the moment we will sign. Okay, so we want to really see that in the core team, but of course. We see that in the industry there are some fund managers make use of experts to really fill some not even gap, but really to tap into some very specific expertise or sectorial focus and so on, and then you have some incentivization through the carry or also through other. Let's say structures, incentivization structure. But that is still minor. We want to see the bulk of the incentives in the core team. And you may be not into a phase where you have full time, but when we invest, we need to understand what is the full setup. I mean, fundraising takes a lot of time, to be honest. I guess you guys know better than us even. So usually we see that the people, the partners, the teams are already full-time when they come to us, because it's such a intense process and it's not very well perceived if you don't have full-time allocation of full-time dedication. So if you don't have it yet, you have to explain us how is your transition to that full-time dedication.
Thanks. Hi. Thanks, sorry. Thank you both, Anna and Nadya, for the presentation today. So quick question, are UK funds eligible that have an EU-based vehicle or an EU focus? You didn't, I know you mentioned F2, so they aren't F2 either, so.
We can, I mean, it's a pity that that the UK is out, because of course we have very interesting activities in there. We can invest in teams that are based in the UK as long as there is 2/3 of their fund invested in EU. And that sometimes is a bit of a difficult conversation when we talk to a British team, because we want to have some demonstration that even if you are in the UK, you are still able to source and execute the strategy in geographies where you are not in.
Yeah, I mean, maybe to bring a bit of an additional flavor to that is that it has become obviously a very hard sell, because the question always would be, having in mind our purpose, the resources that we deploy and the objectives that we have been given by our mandators, it's very difficult to justify why are we doing this with a UK team and we're not doing that in a European-based team. So I would say it's a bit of a, how can I say, tricky situation, if you will, and then it needs to really be clear how actually this team is relevant and better than the teams that we would see in Europe with the same strategy. I would not exclude it completely, but it would be, at least from my perspective, a bit challenging. Probably also depends on the strategy, but it's a tricky topic.
Thank you.
Hi. Sorry.
Okay, cool. Hi, sorry. Jeanette Carlson, I'm from Technology Advocates from the Diversity Venture Fund. So we're raising a first-time fund. So I've got a couple of questions, if I may. Number one, are we able to talk to you prior to the submission of an application to get a bit of guidance and support and ask questions and that kind of thing? And also, I think you mentioned that, but are you doing that as well during the process? So interacting with us and stuff too?
Yeah, absolutely. So actually our slide that was starting from sourcing actually is not always, the process often doesn't start there, it starts before. We start talking with the fund managers that are raising funds even much earlier than when they will submit their applications. So we are very willing to talk to you in case you want to have some informal talk on what TIF expect to see, and also to check if it can be a good match. It can be a good match for you. And also we organize this type of events also for this purpose. And when also we go to due diligence, we spoke to a lot of first-time team, emerging manager, or people that we didn't invest yet. And then also, to your second question, we also have a conversation. I mean, we cannot go forever, of course. At some point, we have to make a decision whether to move to due diligence or to a later approval. But it's not like we talk and then we take the decision. And there can be like some follow-ups, and we can also identify if there are some things that can be changed. So some parts of the proposal that can be amended, and it's like, okay, maybe you can reflect on this and you can come back to us. There are some things, as Nadya was saying, that cannot be changed. I mean, or it would be a flag if you come with a completely different strategy. But indeed, we can have some discussion during the process.
So just on that, so prior to submission, what's the mechanism for getting to talk to you? Where do we, is there a task ID, or how do we get to speak to one of you?
Well, first you meet us, as we said during this event. Yes. We're happy to exchange. We're happy to give you very general guidance as such. But once you enter our process, then one of our colleagues, I mean, either me, Anna, or any other of the 100 people that are in our front office, will be allocated to assess your transaction. They will do their initial analysis, and whatever the outcome of this first step that you saw earlier on the screen, they will also try to give you extensive enough feedback of, for example, if we decide not to go forward, then we'll provide you with the feedback what led us to that decision, which would then give you the opportunity either to fix something if it's fixable right now, or reflect on this for the next time you come to us. So this is how our process usually looks. Of course, if you, as you go along our process, and depending on the outcomes of each of the steps of that process, you would always be given some feedback of what concerns us. It might be something that it's purely connected to you. It might also just not be a possibility on our end at this stage. But we try to be as transparent as possible during that process, so you're also informed. I think I need to turn to our colleagues from our legal department who are waiting for their presentation, if we can take more questions, or we should actually stop and let them take the stage. Okay.
Yeah, maybe the last one, because she was raising the hand for a long time. Yeah.
No, just a quick question. Hi, thank you so much for your time. I'm Rita from Portugal, and I'm in a PVC firm called 3XP Global, and you are managing 5 funds, and one of them is an impact fund. And we were for the first time funded by our National Development Bank, Banco Português de Fomento, which we're really proud of this, and that's why we didn't come to you guys, because it's already European money. And I was just wondering, just 2 questions. Do you invest in evergreen funds, continuous funds? No, okay. No. And another question, Banco Português de Fomento is really part of our, on a daily basis, they are really part of the fund. Do you guys do the same? So do you become advisory board members or something when you, okay.
Yes, so most if not, I actually don't know a case that we are not, but maybe there are, I don't know, but we, as part of our commitment, we always request a seat at the advisory board, because it's also part of, how can I say, the way that we participate in the governance of the funds themselves.
Okay, thank you.
Let's maybe leave the stage to our colleagues in... Last, yeah, this is really...
One very short regarding the geo scope is EU investment, so the deployment is also has to be focused on EU, or for example, the strategy can have some percentage for global investments, UK investments.
It's the initial investments of the fund, so 2/3 of the fund needs to be invested in EU, and it is taken into account at the moment of the initial investments.
Okay, perfect. Thanks.
Maybe she was like for a long time, so this is really the last one.
Sorry. My question is related to ESG. Thank you for presentation. I'm coming from Livonia Partners, head of sustainability. And what is your expectation how the management teams should be incentivized to achieve or work with the ESG targets? Because if we are not an impact fund, so our carry is not attached to it. So the expectation, like a question is that a growing expectation too? And the management team is of course much more motivated by the carry. So the rest of the team gets bonuses, and that's attached to ESG results. But what is your expectation with the management team?
So yeah, we really distinguish between impact and ESG, and we don't expect that also some funds that have very good ESG policy need to link their carry or their incentives to the ESG. We have some best practices, and we have a way to evaluate the ESG practices in each fund. And case by case, we discuss with the manager in case we find that is not up to our standards. We discuss with the team how to improve it, or we discuss what is the general approach, and we evaluate it. But there is not incentivization as such. We have seen in the market also outside of impact a trend, but it is not a requirement for us. We really distinguish between impact and ESG.
Okay, thank you.
Okay.
Thank you, everybody. And if you have additional questions, you can find us.
Welcome to our second and last session. We are going a little bit technical now on legal terms and conditions. So before starting, just a clarification. Some of you had some questions. Don't worry, I mean, our colleagues from the commercial team are staying, and the line in between legal and commercial, in a way, is not so defined, right? There are common areas, so please if you can stay, keep your questions, and then we will address them together. So in the next 40-45 minutes, Gizem and myself, I'm Marta, we will guide you through the following agenda. So first of all, we would like to give you an overview of the legal team so that you can understand with your legal counterparts during a negotiation. We will then move to the EIF legal framework. We will explain you which are the main features that applies to investments. And finally, we have selected a couple of clauses we would like to dig a bit into with you, and hopefully we can brainstorm together. So starting from the EIF legal team. The EIF legal team is part of the General Secretariat EIF. We are 60 lawyers, split into 3 different areas of expertise. So the first team that is very relevant for you is called Equity Operation Team, and me and Gizem, we work there. The second part of the team are the experts on the debt operations. So they work on the guarantee and securitization business. And the third part of our team are the corporate and legal affairs team. They're really the expert on litigation aspect, regulatory aspect, tax. It can be relevant, is a team relevant also for you because they are expert on procurement, and for any regulatory question, they are also involved. The team is extremely diverse. We are 60 people, out of which 40 are actually women. And out of the 60 colleagues, we represent 19 nationalities, 14 nationalities if we consider only the women. So we really bring on the table a nice set of diversity. Now, the way we work is very simple. So every time you are allocated to a team from front office, you always have one of our colleagues involved in the negotiation. So we call it the legal and commercial negotiation. A lawyer of the team is always involved. On top of this, we have quite a big number of panel firms. We have at least 20 panel firms that assist us. And this means that in some of the negotiations, you will also see an external lawyer, an external counsel accompanying us in the negotiations. We have, by the way, some of our panel firms in the audience. We are grateful to have them here. And what we did last year in the context of relaunching our panel, we included for the first time some gender criteria in the selection of the panel firms. And we were very successful because actually at least 1/3 of our panel is actually led by by women partners. And they are not only bringing, let's say, gender diversity, but they are really very, very strong. So we are extremely happy and surprised by in a way, how quick, this went. We went from a panel where, as a matter of fact, there were basically all men, the partners on funds, to a panel that is extremely diversified. So we are very proud of this. Now we will move to EIF legal framework.
Thank you, Marta. Very pleased to be presenting this mini session to all of you. And so let's take it from the top to give you, where the EIF funding is coming from, to give you an idea of where we start from, and then going through the funnel. So we have the mandators of EIF, who are mainly the EIB. So you may have heard the RCR mandate, for instance, coming from the EIB, the EU Commission money now backing the big mandate, InvestEU. Then this is followed by the national promotion institutions that come from the member states of the EU. And they're giving us regional mandates, and they're also active in some of the bigger pan-European mandates. So these are mandators who give EIF the funding for us to be able to execute that investment down to investment funds with a predefined criteria. So our role is, as a fund of funds, is to follow all those mandates, strategies, and investment strategies, and make sure they are rightly reflected in the legal documentation. So this is our starting point, and as a legal team, we also work on securing those mandate agreements with our mandators, and also down the spectrum into the negotiation with the investment funds where we're investing this money. And so, I mean, you all know what a fund is and what target companies are, but just downstream in that relationship, EIF has no direct relationship with the management of the target companies. So we are at the fund level as acting as institutional investor, and our role is to make sure that the limited partnership agreement of the fund is in line with the standards and the policies of the EIF. So we do a lot of work with you, with the managers, to get to that point where everything checks all the boxes for us. But it's a very friendly process. So we do have to implement a lot of procedures. But I would have to say I think it's a good friendly process, and our requirements may be a bit tough, but with the right attitude from all the parties, we do experience a nice process here.
Now, moving a bit to the framework. Thanks a lot, Gizem. Yeah, moving to the framework. As mentioned by Gizem, indeed, we have lots of requirements. So when we start the negotiation with you, bear this in mind, right? So we are an institution that by nature is very much regulated. And what we call the reference framework, the reference documents, are composed by several types of documents. So first of all, every time we make an investment in a fund, we have mandates. So it's our mandator, can be the Commission, can be the IB, can be MPI. So our mandator is always including terms and conditions to our investments. And those terms and conditions, of course, needs to be transposed in the negotiation with you into the underlying fund documentations. The mandates are different, so different funds can face different requirements, mandate-wise. However, at the EIF, we also have plenty of requirements that are horizontal. So they apply across business lines. They apply to all the funds because this is our internal framework. And here we have a set of policies, right? Many of them, they are related to, of course, compliance issue. But we have also policy and guidelines that are really just related to equity fund investments. So they apply to all equity fund investments. Here we have a set of guidelines. We have a set of policies and practice, and you will get familiar with all of them during the negotiation. On top of this, we also have our, let's say, the approval documents from our governing bodies also include the requirements. So once we go to our board of directors with a proposal to invest in a fund, in one of your funds, there can be further requirements that will be discussed ad hoc. So this requirement will be different from the one of the other fund. So don't be surprised if when talking in a market, sometimes you see requirements that are not common. It's just because not each requirement is applicable to any investment, although a big part it is. Then, what do we do with all those requirements? We discuss with you, and we reflect them in the fund documentations. We have a slide on this later on, so here I go a little bit quick. The fund documentation in which you find the requirements are the LPA, the Limited Partnership Agreement, the SI letter. We have them, some of them in the subscription agreement, and also in our legal and tax opinion. Now, how can we internally basically ensure that all the requirements, including the framework, are actually transposed into the underlying fund documentation? Well, this is done by a number of internal risk management systems that we have developed over time to ensure that we don't miss anything, which, for your information, includes a number of processes that requires signatures, right, of internal documents. And we also have developed what we call, and what you will hear, the so-called legal checklist. So for each mandate and for the internal framework, we have developed ad hoc table of requirements that we need to confirm ahead of the signature of the fund. So if one of those requirements is not met, we cannot invest. Now, what is relevant for you to know from this framework is that there is not much flexibility we have on those requirements, right? So during the negotiation, we are always happy to explain what is the background, what is the context, to discuss together. But the reality is that, especially on our side letter, those are internal requirements that, in a way, needs to be included. Otherwise, we cannot continue basically with the investments. And this comes from our complexity as investors, that we are, of course, very much regulated.
Yeah, so I think also colleagues Nadya and Anna mentioned a few of these on especially governance, etc. But one of the policies that we follow when negotiating the LPA with you is EIF's good market practices. So it's our job to set good market practices in the market, and then we try to remain also up to date with our good market practices, because these are very customary terms that you see also from other LPs. And usually we have no issues when we receive an LPA from Fund Council. Most of these are covered, but we do need some specifics, and we might have to go into further details depending on the transaction. So a few examples here you can see is on fund management. My colleagues explained, no need to go into detail, but this is our starting point, very important topic. And then maybe on risk mitigation and conflicts of interest, we can mention a few lines. So we will require risk diversification rules in the LPA, meaning certain limitations on how much money can go into each portfolio company at the fund level, and then certain a buffer to increase that with advisory board consent as one of the standards we negotiate alongside borrowing requirements. This is very important, dear to EIB's heart, so we need to cap those at the level of the fund, as well as regulating crossover investments between another strategy you might have, so between funds belonging to the same manager. We need to avoid transactions from happening. And at the investor protection side, we also negotiate in detail these removal terms: removal for cause, removal without cause. Some of you may be familiar with these concepts. This is the right that is given to the LPs to collectively agree on removal of a fund manager if things are not going well. And the other one is the key person event. After we define who will be the key persons for this fund, they're locked in for life. So if they go somewhere, then we need to trigger some mechanisms to cure that process. Otherwise, also what's important on the economics is we generally set up an escrow account at the fund level to lock in the carry distributions until commitments contributions are received by the LPs, and as well as clawback mechanisms, making sure if excess carry is paid to the GP that those are returned. Co-investment rules, very market standard rules that we follow, but usually the request is that there is no management fee or carry paid to the manager in case there are co-investments made into the portfolio companies of our fund. And when it comes to reporting, this is, as an EU institution, is a must. So we have a lot of reporting templates going into a lot of details. So we give those to you for you to fill out. What do you make use of is to use that for your other LPs as well. So, I mean, you follow our reporting guidelines, but of course, I mean, these can be also useful in your general reporting.
We go ahead. Is there any question? As we touch upon a slide with quite a lot of commercial terms. Yes. Yeah.
Yeah. So co-investments are regulated. So in case there's a portfolio company in the fund that is in need of financing externally that the fund resources cannot cover, then there could be separate vehicles set up to invest further money into that portfolio company. And if these can be made with the LPs of the existing fund or with third parties, etc. So that vehicle is also managed by the same management company. And when that investment is made, the terms are mirroring our LPA of the main fund, but then we avoid double management fee charging from that vehicle to the manager.
Yeah, you will see in the context of a negotiation there is always discussion about co-investments, right? When are they allowed or not, with whom. So it's always a topic of discussion. Thanks for the question. Any other question? Or we can. It's difficult to see the light.
I mean, I don't know if it's really relevant here, but we haven't touched upon any difference between primary and secondary investments when you're looking at sort of the types of funds that you invest in and the structures you allow, essentially.
You mean primary by the...
As in, like, investing in new capital into a business versus buying another fund's share of...
So at the level of the fund?
At the level of the fund, but then, of course, trickles up into what's allowed and what's not allowed.
Sure. So, it's more important for EIF, for funds to be investing in primary capital. So generally, our mandates focus on that, but also secondary investments are allowed. Do you guys want to comment on this? We have buyout funds in the portfolio as well, but more injection of new capital might be desired according to our requirements.
Mostly primary. We are also in a specific, me and Anna actually, on a specific segment of the market where mostly primary investments are done. But I don't know if in our other strategies they do that. But I think we also ourselves have a secondary equity, but it's rather around funds.
Yeah, so it's allowed, we saw it, but in minor proportion, let's say.
Thanks.
But the LPA will be the same, whatever you do.
No, I know. I was just thinking about the structures here, and it came to mind.
Yes.
Thank you so much. I was wondering if you could give a bit of a clarification on how you look at conflict of interest. I mean, it's a very, vague at sometimes concept, and it can be interpreted. So is there like a clear sort of guideline that you go by, and could you share it maybe?
Do you want? Or if you prefer, otherwise we cover what is in the...
So yeah, we can maybe briefly touch. So there are a lot of things that can, or let's say there are several topics that can cause a particular conflict of interest, and that is also still regulated into the OPA. That's why we also have a limited partnership advisory board that is usually managing those, or let's say trying to resolve on those, or get comfort if there is a potential or already occurred conflict of interest, to see what is needed to resolve it. So a lot of those, I think, are either already, let's say, defined, or let's say the ones that we see most often, we already embed either a mechanism how to deal with them, or let's say who would be the competent governing body to opine on that and on the resolution of it. But there is, how to say, it's a very wide spectrum to cover them individually.
We can give some examples of what we list as conflicts of interest. So, for example, transactions made between affiliated funds, or like buying and selling of shares, or like investing together into the same portfolio company where you don't have in the same round independent investors that have a significant also participation. Also transactions between co-investments between them. Yes, also related party transactions when you're giving services, like management companies, affiliates giving services to the fund is also another conflict point which needs to go through us, or if you're charging service fees that are not contemplated, so this can be a conflict point. So
but the way we second example, just to keep going on, the second example on the affiliated example you gave. So how do you address that kind of conflict of interest? Do you say that we then don't invest in these companies, or?
Yeah, as a rule, yes. Okay. The rule is that the principle is it's restricted, but if there is a desire to do so, you can present to the advisory board the project and then get a clearance. Okay. From the advisory board. If it's satisfied, then you get the green light.
So that you can justify the mitigants that you put in place. So from
but that doesn't block the process of the progress of the application, or does it? You know what I mean? It's
of the application
for the application to receive funds as a GP.
No, let's say what we will do as for any fund, the legal documentation, of course, has a long article on conflict of interest. Is an open article, as Gizem was saying. We put some examples just to give a flavor, but it will remain open. So every time you believe you are in a conflicty situation, you need to disclose.
Okay.
And then if the advisory board indeed consider that the mitigants in place are enough, they clean the conflict, just the conflict and not the transaction. If the conflict are considered not to be mitigated, then
thank you.
You are conflicted, and if you go ahead, you'll be in breach of the fund documentation. Yeah.
I mean, I think if I understand your question, if we, at the moment before entering legal negotiation, at the moment of the screening, we realize that there is already a high conflict of interest, we evaluate it. If we assess that is very substantial, we may decide not to go ahead because of that. It can be if that was your question. If it's just a minor thing, then we see also there is willingness to find mitigants. We go ahead. It's not reasons to reject per se. But for example, if you are splitting your time 50% in two funds with similar strategy, then there is a clear conflict of interest. We may not even go ahead to the due diligence and so on. But maybe if you have done some angel investing and you still want to invest, we challenge that, but we can still discuss. So it depends on how material and how affects the strategy of the fund.
Yes, this is a very important clarification, because what we mentioned is more an ad hoc situation that comes once in a while in the life of the fund, right? Then this is what is regulating the LPA. Then, of course, if the conflict is there in terms of structure, then it's a different thing, yes. And then it's assessed before, yes. Okay, we continue a little bit, and then if you have other questions, we go back. So on the legal documentation, unless you are particularly interested and keen, we go quite quickly. But what is important for us is that indeed we are aligned on which documents EIF is revising, so that when you speak with your lawyers, you can already mention to them. So we negotiate basically every document, right, that is related to the fund in a simple structure. This means that we revise the LPA, the limited partnership agreement, different jurisdictions, different names, can be management rules, shareholder agreement, but it's still the document regulating the life of the fund. This is a document that, of course, is the manager and the manager council sending to us. So we are working on your document. The same for the subscription agreement, can be called deed of adherence, the document in which we commit to your fund. This is also provided on your side, and also the legal and tax opinion, they are provided by your lawyer. So these documents are heavily revised by us, and generally we organize a number of, together with the colleagues from the commercial team, a number of exchanges, a little bit in writing, a little bit on video or in person, if this can be useful. But there are multiple interactions on this documentation. The only document that is provided by us to you is the side letter. This is bilateral document between the investor and the manager. On EIF side, this is pretty long. We are well beyond the 50 pages by now, and for certain business line can be double. And those are specific requirements that, if we go back to the slide, right, we discussed before, the side letter includes all the requirements applicable basically to us that are, of course, relevant for your investment. And lots of reporting, and Gizem was mentioning before, requirements. And again, this is really the document in which we can explain, but it's very important for you to familiarize, see whether you can comply with this, being aware that we can discuss, but we won't be able to modify this much. Okay, then of course, the most complex the structure, the more documents we need to revise, right? There can be agreement with the IFM, there can be feeder, LPA, master document, then a parallel vehicle, but okay, in this case, we need to, of course, revise all the funds documentation.
So here, remember this was a slide, but can you press again, Marta? There was something on the top. No, okay, it's not showing.
It goes direct.
Okay, can we go back? Okay, so the steps of an EIF transaction are it's like an M&A deal or any other similar project financing transaction as well. So we start where legal goes into play is when the deal is approved, actually. So we're not involved during the due diligence, but after the deal is approved and your fund counsel prepares the LPA vis-a-vis the fund managers, then the file comes to our team, and then we get involved with the revision of the LPA. So it's customary that we give you commercial comments together with legal comments on that LPA, and then together with the draft side letter, which we enclose for you in that file, and then during the course of the process, we have several, calls with you and your counsels. So the more you are involved in those calls, the better, because that really facilitates the discussion also between lawyers as well. And then because sometimes we can get stuck on, really small things. And when the management team is there, this is quite helpful. And then also you see in the flow the subscription agreement revision, which Marta mentioned, legal and tax opinion revision. So depending on the jurisdiction the fund is set up, we will need a tax opinion. So if it's a Luxembourg fund, your Luxembourg law firm will provide a legal and a tax opinion to us, which is very standard in the market. So they will know what we're looking for. We will give them a list of a request list setting out the items, so that will be there. And then throughout the process, I would say, which takes usually 2 to 3 months, if it's a good, if it's a straightforward process, then we get to the signature. And these days we're doing it digitally, using the digital platform, so that you see DocuSign there, and everything is made digitally. And after the signing, we have certain closing conditions that need to be satisfied before the EIF money can be drawn on the first closing. So the main condition is to reach a minimum fund size. So you can sign, EIF can sign into the fund, the subscription agreement at 0 fund size. But it will require, for example, the minimum size, the subscription agreements from other LPs to be collected at up to a certain amount. So once that happens, then the manager can close the EIF investment into its fund.
Oh, you see, now it's coming.
Yeah.
Now, when we sign, we are still there, right? So we don't disappear. We might get in touch less often, but still there is work to be done afterwards. So first of all, some months after the signature, during closing process, we will be in contact together, always, of course, with our colleagues from commercial team. We will be in contact to see whether there have been changes to the documents following requirement of other investors, in which case we will rediscuss together to see whether we can accept them. There will be MFM process during the closing period, and again, we will be in touch. And this will continue through the life of the fund, in case every time there is an amendment of the fund documentation or waiver request, we will be involved. We will be discussing together, voting forms, AGM and LPAC meetings, and we see more and more towards the end of the life of the fund. We are receiving extensions, requests for extension. There are restructuring, and also at that phase, after 10, 12, 13, 15 years, we will be still, let's say, discussing also from our side. So it's a relationship that will last also with the legal team for a long time. Question, yes?
Just to understand, that's from the previous slide.
Yeah.
If we're starting an agreement with you at the same time we are fundraising, there is any possibility to have a lawyer from your side that you are under discussions with us that we could also present to the other potential LPs?
So if I understand correctly, so if we are in the negotiation process with you, so let's assume that we have the approval, so we start the negotiation, we can bilaterally negotiate, right? We reach an agreement, as Gizem was saying, we can even sign conditionally, and then you will need to negotiate with the other investors.
Okay. But what I was asking is, before we close, if there is any MO or letter of intent that we are...
Term sheet can be provided.
Yes, a term sheet can be provided if it's of help, rather than starting indeed on the basis of your LPA. Very often we share with you a term sheet of the commercial terms we want to be included in the legal documentation. So this will facilitate basically the work for you and your legal counsels, because of the commercial terms will already be included, and you can go basically quicker. And the negotiation can be much shorter. Yes.
Okay. And also another question, sorry. You cannot commercialize the fund in one side in an open way, or how does it work? Because I remember that the legal terms, it was complicated here, isn't it?
You mean the marketing rules?
Yes, the marketing rules.
We're not the experts on that.
Probably
but there are some restrictions to market the fund. But I mean, usually your law firm will advise you on what you can do around that. So sometimes it's like, it's not good to give subscription agreements at certain stage. But I think with the right disclaimers and waivers, in practice, people achieve it.
But indeed, we see that this differs very much from jurisdiction, by the way, to jurisdiction. In certain jurisdictions, we see more issues. But indeed, this is a super important point for your lawyers to indicate to you which kind of document you can share at which time and when you can collect the signature from us, indeed.
Thank you very much.
Any other question? No, we are now presenting to you a couple of contractor highlights. So we don't have too much time. So here we will go a little bit quicker. I think we have already covered lots of them, so that in case you have further questions at the end, we have some time.
Yeah, just on the side letter, Marta explained the side letter before, but it's made up of a few structures. So we have the main body, which includes the EIF's policy terms, the investment policies in there, and then it's complemented by the mandate schedules. So the mandate schedules is also something, if you're advanced in the due diligence, you can also request from the investment team to see what are the mandate conditions. And then we also follow with the generic schedules, which contains a lot of reporting. And lastly, our compliance schedule, which contains a lot of robust terms on non-compliant jurisdictions, sanctions, compliance with law warranties. So all the compliance matters that are embedded in EIF and EIB's policies come from here. So on the right-hand side, you can see that there is very little to no room for maneuver in these. And if we need to make a change, we need to go back to internal EIF services and get clearance, and even from mandators, which become like a mission impossible. So there we need your collaboration on getting these terms through.
A brief mentioning, this is relevant here, the gender criteria. So EIF has two types of gender criteria. One is coming, let's say, from specific mandates. So it's good news that some of our mandates, some of our mandators ask for fulfillment of gender criteria. We brought here the example of InvestEU, that is one of our major mandates. And it's with pleasure that we saw that indeed our mandators are willing for EIF to take a larger stake in a fund if certain gender criteria are met. So this is good. Let's hope that more and more mandates will go in this direction. And we have also developed internally, horizontally, so at EIF level, some gender criteria. In particular, we are really encouraging fund managers to do training on diversity and inclusion, encouraging to the extent possible to diversify, right, in terms of gender balance when hiring. And also, especially at the investment committee, investment team level, really have gender representation there. It's a start. This is not the end, hopefully, but it's a good start in the right direction.
Yeah, and lastly, we just wanted to update you with the EIBG list of excluded activities. So we have a set of sector restrictions whereby we need to reflect into the fund documentation for each of our fund managers to be restricted from investing in these sectors. So these are for ethical or reputational reasons where the EU money cannot be exposed to directly or indirectly. So no excuse rights around these. So general blanket restrictions on certain sectors which the funds are not allowed to invest. You can also get this document from the EIF website, but this is the new EIB group list. So this was published as the result of the strategy on strengthening EU defense and security. So the latest flexibility that was provided in the new list is while keeping the restriction to invest in weapons and ammunition on military or police equipment or infrastructure, investments will be allowed in the EU from now on, which was not allowed in the past. Not to mention the dual-use investments still being eligible. So we just wanted to update you on this, but we're working on the implementation of this right now, so it's not yet in our contracts.
But yeah, keep an eye on our website because everything is indeed covered there in this respect. Okay, so thank you so much for being with us in the legal.
Thank you.